Topic 1. Headlines are dominated by the fallout from the Middle East-Iran conflict. Repeated Gulf shipping attacks, threats to close the Strait of Hormuz, and warnings oil could hit $200 have spurred oil price volatility. Record IEA reserve releases and President Trump's planned SPR release, while pipelines and other workarounds aim to limit disruption. Summary, 3 to 4 lines. After U.S.-Israel strikes on Iran, Iran-linked forces repeatedly attacked tankers and merchant ships in the Persian Gulf, effectively paralyzing shipments through the Strait of Hormuz and causing casualties and evacuations. The disruption threatens a large share of global oil flows, driving record IEA reserve releases and the U.S. SPR decision, but markets remain volatile and skeptical about immediate relief. Bypasses such as major pipelines can help, but cannot fully replace Hormuz flows. Insurance, shipping costs, refining constraints, and geopolitical risk keep prices unstable. Detailed script. Start with context. After the U.S. and Israel conducted strikes related to Iran, forces aligned with Iran carried out repeated attacks on commercial and tanker vessels across the Persian Gulf. Over recent days, multiple ships were struck, set on fire, or forced to evacuate, and there have been reports of casualties. These attacks have, in effect, brought shipments via the Strait of Hormuz to a near standstill. Explain the strait's importance and supply impact. Normally around 1/5 of the world's oil and gas, by some measures on the order of millions of barrels per day, passes through Hormuz. Threats to close or to disrupt the strait can block hundreds of thousands to millions of barrels per day. The IEA characterized the situation as an unprecedented supply shock. Describe immediate policy responses. Strategic reserves. IEA members agreed to release a combined 400 million barrels from emergency stocks, and the United States said it would supply about 172 million barrels from its strategic petroleum reserve. The U.S. announced SPR shipments would begin next week, and that full delivery could take roughly 120 days. Cover market reaction and price volatility. Brent prices moved around the $100 mark, and WTI jumped into the 90 to 95 range with sharp swings. On some trading days, prices briefly spiked into the 110 to 120 range. Some analysts warned that if physical shortages materialize, Brent could reach $100 to $150 per barrel, or, in worst-case scenarios, approach $200. Note skepticism about the cushion value of releases. Markets widely view the releases as a short-term buffer at best. Questions remain about how fast the oil can be delivered. Logistics and technical constraints could delay physical arrival, with some estimates of 60 to 90 days to reach affected markets, so immediate and sustained price stability is unlikely. Discuss bypass options and their limits. Saudi Arabia's East-West petroline can move substantial volumes, reportedly up to roughly 7 million barrels per day, and the UAE's Habshan Fujairah ADCOP route can carry around 1.5 to 1.8 million BB. These pipelines can partially offset Hormuz flows but cannot fully replace them, given risks to infrastructure, refining capacity limits, and transport bottlenecks. Cover shipping and insurance implications. The halt to normal transit and rising war risk exposure have driven up war risk insurance premiums and operating costs. The U.S. government has set up a roughly $20 billion facility with DFC and insurers like Chubb to help backstop commercial route insurance, but securing safe passage remains a primary challenge. Explain economic knock-on effects. Higher oil prices feed into gasoline, jet fuel, transport costs, and fertilizer prices, raising the risk of renewed inflation and slower growth. U.S. pump prices already rose to about $3.58–3.59 cents per gallon. Central banks face a difficult policy trade-off between inflation control and weakening labor markets. Summarize policy and military signals. The Trump administration announced SPR releases, considered Jones Act waivers, and discussed naval escort PUS.